World. Nicholas Coriano here. I wanted to help people understand how to financially forecast a catering company. So I have this cash flow statement here. I'll put the link to where it's available. I sell the cash flow template, but if you have any cash flow template on Excel, it works the same way. So I just want to show you guys how to fill it out. Okay, so first things first, what you're looking at, I'll tell you exactly what you're looking at. What you're looking at is what they call a cash flow statement. It tells you how money comes in and out. So basically, money that comes in is on the top half, right? So these will be incoming revenues, and these are your months, right? This will be, let's say, January, February, March, April. It could be whatever month you want. This column here is what we call the pre-startup expenses. So these are expenses that you have before you even start the business. So on day one, let's say you buy the trays and you buy business cards and you build out a website. That's day one. We haven't started the business yet, okay? So that's that. On this half, on the bottom half, what you see is money out. So it's very simple. On the top half, you have money coming in. On the bottom half, you have money coming out. Now, if you guys happen to use my template, the template I'll give you guys a link to down here, you'll see that the yellow parts are what you can fill out, but there's a lot of information you don't fill out. So for example, anything that's not in yellow. So I'll show you how to do that. So here, the way I do it is I tied it into another graph here, right? Another tab, I should say. So these are tabs. So this is year one. I'll click on the tabs real quick. Year two. So this cash flow projects out for 3 years, okay? Year four, year five. It has a tab for employees, right? Then how much your itemized breakdown, and then it'll spit out some graphs for you as well if you guys happen to use this. But I'll keep it simple for you guys, okay? So in this itemized breakdown, let's say you guys are doing catering for hotels, and let's say you do lunches, dinners, right? And maybe there's an appetizer section, right? And let's say the price, the whole package. So let's say you have a lunch package, and it's for 100 guests, and let's say it's for $5,000. Okay, and the same thing. Oh, let's do 5,000. 5, 1, 2, 3. What the hell's going on? Okay, there we go. And then dinners, we'll call that 10,000, right? Another 10,000 for appetizers. Now here, this is the market size. So here you may say there's 100 hotels, right? So that's the market size. And you plan on getting one of them, right? One of them. Okay, so, and this is how many sales you get per month. So out of those one, you're gonna do, let's say just one sale. And let's say 2 of these sales, just so you guys can see the difference. And this will start tallying it up here, okay? And what it does is it'll give you down here, it'll spit out exactly how much your revenue is for each item. Now, if you go back to year one tab, you'll see that these automatically fill out, okay? Now, if this is too complicated for you guys, right? If you look at this and you say, man, Nick, this is too complicated, it's very simple. You just delete this tab. I'm gonna delete this. Now I'm just doing this to showcase the forecast will come exactly as is. So now you'll see a bunch of REFFF here, right? And what you're gonna do, and that was also tied, by the way, to your marketing, which I didn't show you guys, but it's simple. So you can just project, I'm gonna make $1,000 on hotels, on weddings, I'm gonna make $5,000, on other catering, I'm gonna make $2,000. Okay, and you can go throughout here and you'll see that on this line, on line 13, it adds it up for you. Okay, so let's say, you can make all these numbers up to whatever you want, but let's say you wanted to keep it even. So I'm going to keep it even. I'm going to drag this out to the end of the month here. Boom. And so now it's even. So now what you see is a bunch of red, because what we're saying is we're spending too much on employees. So let me go back to employees. And again, only the parts in yellow you have to change, okay? So, and this should be yellow here. So you're gonna have to change this. I'll change this for you guys. So you guys can always come back and check this out, right? Oh, I'm gonna reset that. I'll make this yellow for us so we can see what we have to change. But let's say it's only the founder, right? So the rest of these are 0. That's going to bring down your yearly costs, right, per employee. So let's make all years 0. We only got one founder, but that founder wants to make, call it 60,000. Let's give him a raise, 75,000. You'll see that it changes over here to 75,000. And now if you go to year 1, what you see is this line item here is 75,000 basically divided by 12. Now, you'll see, why doesn't it come up to 75,000? In year 2, if you look at year 2, you'll see year 2 comes up to 75,000. In year 1, it doesn't come up to 75,000 because we assume that you're going to give yourself a bonus when you first start. If you don't want to give yourself a bonus pre-startup, put 0, okay? So now, this graph is going to break down your pre-startup expenses. So here, let's say your pre-startup expenses are $500 for marketing. You had to rent the place for $1,500, right? You got permits of $250, equipment of $1,500, right? Maybe a POS system, small, something from PayPal or Stripe that you could swipe credit cards. Call that $100. And let's say inventory for $1,500, okay? That's going to show up in this pre-startup pie chart, right, which is really helpful. The revenues currently on the graphs are increased by 10% a year. So if you look up here, basically anything you did last year, it's saying that it's going to grow by 10%. In year 3, same thing. In year 4, same thing. In year 5. So it grows 10% a year. And if you look at the graphs, you'll see this growing, okay? Now, what you'll see is that we're not profitable in the first year here, and it's mainly because we have these pre-startup expenses, right? Now, remember, with a catering company, your biggest expenses are going to be your inventory. So these 2 items here. One trick when people are doing this is to grab your total number. So now, what you realize here before anything, let's say you keep these expenses here. Let's say there's $2,000 a month for marketing, and you want to pay yourself $75,000, so you're talking about $6,200. What you realize is you have to make at least $8,250, right? This number down here, $8,250, to break even. So when you're forecasting this, if you don't see yourself, like right here, we're making $8,000, $8,250, that's a no-go, right? You're gonna run out of money soon. The only reason this is still red is because you started with $50,000. Let's say you started with nothing. You'll realize rather quickly you're losing money, right? You're down 68, you're down 71, you're down 7,300, 7,600, 7,800. So always make sure whatever this number totals up to here, that you're not spending more over here. Now, a little trick after writing 350 business plans for catering companies, if you've done catering long enough, you'll start to realize that your food, your inventory, the cost of it is a certain percentage of your revenue. So let's say it's 40%, right? Now it depends, right? If you're selling steaks and salmon, it's going to be 70, 80%. If you're doing pizza, it may be only 40%, 30%. But let's say for example's sake that your inventory is 50%. I'm going to show you guys a little trick on how to do this, right? So let's say this is the inventory line, and you say we made 8,000, but we spent 50% of that on food. So you're going to do equals, you're just going to follow this formula, equals, you're going to click the monthly revenue, right? And then you're going to do times, which is the little star, 0.50. And if you press equal, you'll see that that equals $4,000. So it's half of this. If you grab this cell by the corner and drag it, it'll match it to all these. So let's say this month, for example, you happen to have a bang out month and you made $50,000. What you'll see is that the inventory number changes too. So it automatically changes. So this is what they call a variable cost, as opposed to something like marketing, which would be a fixed cost, right? It's the same every month. The inventory is going to fluctuate based on how much you sell. And then you'll realize that you may have to make more money. So let's say we do $10,000 in hotel revenue a month, and we train that over, you'll start seeing our numbers go positive, okay? So that's basically what you have to do to fill this out. It's pretty simple. You fill out the expenses down here, okay? The revenue can be filled out up here unless you want to keep that other tab. It's pretty self-explanatory. And down here, is what most people keep for a loan. So let's say now we started at 0. That's why you see all these numbers I read, right? Or let's move this number to 50,000 for weddings, right? You guys are doing a lot of good marketing, and I'll teach you guys another little trick about marketing too. So now you guys are in the green, as they call it, or in the black, which means profitable. This number is red because you spent money here in the pre-startup phase, but you didn't spend money you didn't have. You had some money. So let's call this $10,000. 2, 3. $10,000. You took $10,000 loan from Auntie May. Auntie May wants $15,000 back at a rate of $500 a month till she's paid back. So you put $10,000 here, and then down here on loan payout, you put $500 a month. Okay, and you're gonna drag this out for as many months as it takes, and you can continue on. So that's 12 months, right? 12 times 500 is 6,000, right? And then let's do another. Let's give Auntie May, let's say she wants 12,000 back, okay? So that's 2 years of $500, right? This is a simple loan. You can also get a loan calculator and actually factor that in. But that'll factor that in. You'll see that we're in the black here. We're growing as long as we're growing at 10% a year. Now, this doesn't have the inventory in it. So remember, you want to insert this inventory on the second page. So let's go here. Inventory equals the total times 0.50. 34. Let's see if we're profitable. Let's see. We are profitable. And the way you can tell is that this number keeps going up, right? So if you don't understand, let me repeat what this is, and I'll go through it line by line. This is the money coming in. So if you start with 10,000 and you subtract all of this, right? It's going to give you, that's 5,350. You subtract that from 10,000, you get 4,650. If you go to the top of the month, you see 4,650. That's your beginning balance. You add what you made, which was 62,000, plus the 4,000 equals 66,000. Subtract 52,750, which is all these numbers here, right? It gives you a little total down here. Minus 500. That's 53,250 in expenses. And now you have a $13,400 cash balance. And if you go up to the beginning of next month, you'll see that cash balance again. And then it repeats. You add your income, you subtract the money that went out, which is all of that, plus minus the loan to Auntie May. And now you have a balance of 22,100. You go back to the top. So these are on the top on line 6 is your beginning cash balance at the beginning of the month. And line 38 is your ending cash balance at the end of the month. So that's basically how you read this. This will break down, I added some graphs here just to be fancy. This will break down, your sales breakdown. So it'll tell you what percentage of revenue is coming from where. This can also be done, in pro forma, meaning in the future. It'll show you what you're going to do in the future, what you project to do in the future. Or you can put in the data based on what you did over the last year. And, it's very telling, right? If you look at this data, and this was from the last year, and you see that most of your revenues in wedding, then you may want to double down on wedding marketing and cut out some of this other stuff that isn't working so well. One last tip before I leave you guys, when you're projecting this out, what I've done here, and again, you can change all these formulas, but what I put here was 25% for marketing. So if you look at marketing, it's always 25%. Why? Because the more money you spend on marketing, generally the more money you make. So if you are projecting next year a 10% increase, right? Then a 10% increase in marketing, then you have to be willing to sacrifice, and this is off, right? So this should be E13, right? You got to sacrifice spending more money. You can't just assume that you're going to make more money and not spend more money. You're probably going to make more money because you're spending more money, and usually you're spending more money on advertising. So that's just a little tip. Sometimes it's good to just project advertising as a percentage of revenue. So if you're making $62,000 a month, you can say 10% or 20%, or in this case, I have it already in there for 25%. And it's pretty easy to do. So if you just go equals, you put your total revenue for that month, and then just multiply, let's say by 10%, 0.10, it'll give you the marketing, right, at 10%. If you drag it, it'll do that for every month. So I hope that helps. If you have any questions, put it in the comment section below. I'll definitely help you out. as much as I can. If you want the template, I'll put that template link below as well. If you want just somebody to do it, I do that as well. That's what I do for a living. I'm the businessplanningGuru.com or nicholascoriano.com. You can find all my information on my website. I'll send you more information if you guys reach out to me. But check out my website if you guys want somebody to do it yourself. If not, check out the link below if you want to buy the template. And if not, just go grab a template, Microsoft Excel template. They all pretty much work the same. Just look for a cash flow template and you can do this. I hope you guys have a lot of success in your catering company. I hope this helped out a little bit. Remember, stay out in front. It's a very simple equation. Make more money than you spend, okay? I know it sounds easy, but it's going to take some practice. So never give up. Keep trying. And if you need any help with a business plan, reach out to me.